Hello, Bob, and thank you for joining us once again. Happy New Year to you. Let's kick things off with the major currency pairs. It's the first week of a new year. With limited data release due to be out next week, what should our traders be looking out for in terms of key statistics?
It's a relatively quiet week ahead, actually. For the US dollar, key stats are JOLTS job openings, inflation, and retail sales and consumer sentiment figures at the end of the week. I would say that retail sales and consumer sentiment will probably draw the greatest interest, and obviously the weekly jobless claims figures on Thursday as well. Those are the key stats to look out for. How much influence they'll actually have on the market? Well, we've got all this optimism following the blue wave, and the Democrats taking control of both houses. So obviously stimulus, the Fed, all of that and the vaccines are expected to support an economic recovery that should make the markets a little bit forgiving on any weak economic data. For the Eurozone, it's also a quiet week. Industrial production figures, really the key stat, not much else to consider in the week. For the pound, it's a busier week. We've got retail sales figures in the early part of the week, and then wrapping things up, manufacturing, industrial production figures and GDP numbers. But again, obviously the UK is in lockdown at the moment, but there is the vaccine and obviously hopes of an economic recovery. So while, obviously weak data will weigh on the pound, obviously a Brexit deal and vaccines and hopes of a rebound will limit the downside.
So it looks like we should be keeping a close eye on inflation figures and production stats in the week ahead. But what about the commodity currencies? What can we expect out of Australia, Canada and New Zealand?
For the commodities currencies, it's a pretty quiet week ahead for the Aussie dollar retail sales and consumer confidence numbers. Obviously retail sales is particularly key from an RBA perspective in terms of the economic rebound, and obviously consumer confidence drives spending, so expect these two numbers to have an impact on the Aussie dollar. For the Kiwi dollar electronic card retail sales figures, obviously that's going to have some influence with a lack of other stats to consider. For the loonie, there are no material stats to consider, leaving the loonie in the hands of crude oil inventory numbers and the OPEC's monthly report, obviously, and market risk sentiment that will drive the majors. And obviously there's economic data out of China to consider as well. But ultimately, commodity currencies are on the upward trend, supported by vaccine news and hopes of that economic recovery globally that should support demand for commodities and therefore commodity currencies.
So relatively quiet on the commodities side. But how about Asia? What can we expect from China and Japan in terms of the Yuan and the Yen? How's it looking for the Asian economy in the week ahead?
For the Japanese yen, quiet week, just core machinery orders. That's the key area of focus in the week. Again, don't expect too much influence on the Japanese yen. However, obviously we're looking at Covid-19 vaccine updates and obviously stimulus talks to support, the majors and provide direction in the week. Any stimulus talks, we should see some easing in demand for the Japanese yen. Should we see economic indicators begin to point northwards, but that's going to take some time, obviously with lockdown measures and containment measures still in place in key economies. For the Chinese yuan, we've got inflation and trade data. Expect plenty of interest in the trade figures. Obviously, markets are going to be looking for the Chinese economy to continue to be recovering from that meltdown in the first quarter.
And finally, geopolitical risk. With the US presidential handover just 2 weeks away, will Donald Trump go quietly, or can we expect more mischief between now and then? Also, the coronavirus vaccines globally now taking effect, but still cases are rising. How are the markets reacting?
On the geopolitical risk front, well, you got less than 2 weeks left before the US inauguration. Obviously, there's been plenty of interest in what's been going on Capitol Hill. Trump's finally turned around and said that he'll agree to an orderly transition on inauguration day. But between now and then, has he got any other tricks up his sleeves? Obviously, there's anything that can happen when it comes down to Donald Trump. So that will be something to look out for. Ultimately, looking down longer term, any moves by the outgoing US president is unlikely to have a material impact on the markets just because of the fact that he's only got less than 2 weeks left. Obviously, COVID-19, that's a key driver still. So vaccine progress will be key to support that sentiment towards the economic rebound, and obviously any stimulus talks as well.
Well, that's all for this week, Bob. Thank you so much for joining us, and I'll see you again next week. That was The Week Ahead with Bob Mason of FX Empire. In the meantime, keep up to date with all the market developments by following us on all our social media outlets.